Hello traders, happy Tuesday. How's everybody going? I hope you're having a great week. And I'm going to go real quick. I'm going to go over this idea real quick. This is based on the fact that Asia is this niche. Usually when the market sells off with Asia, as you see here, and also here how Asia started selling towards the end of its session, it triggers corrections. So not only that, Asia stopped right at 3,500. If you look at the over here at the top of your screen left, the numbers over there, the open, the high, the low of each candle. When I place my cursor over that candle, the highest candle of Asia, the high was 3,500.2. That's very, very algorithmic. It triggered that sell-off. So to my understanding, there was a lot of take profit orders there. And so that triggered liquidation. And seeing London open, grab liquidity below this low, right? London opened here, came down, traded up, and retested this area. So this is this is a key area as well. Seeing London do that and coming down lower, that tells me this is already breaking structure to the downside. Okay, yes, we did have a rebound here, but measuring this impulse, that drop is more than 50% of this impulse. And so that tends to also show weakness. And now the target is very likely that these lows are targets. Okay, we could start to see a big correction just like previous weeks. And so this might go retest at least the weekly open price, which is down over here. But there's all these lows are liquidity for the market right now. And seeing London not wanting to trade toward the top again tells me a lot as well. So these are the things that I'm looking at right now. New York could change things because this correction might be just a little one, and it'll only go to maybe roughly around this consolidation area, and then New York bounce here and then trade higher. But that would happen if New York opens and starts trading down first. So if New York opens at 8:30, right, it starts coming down quickly, 9:30. If by 9:30 or 10 it's already down over here, it's likely they're going to buy at 10, between 10 and 11, and bring price back toward these highs. And then maybe it won't be until tomorrow that we might see yet another drop, or potentially price flip and then keep going with the trend. I've been trying to study these corrections more and more, and again, I'm only sending this selling idea based on how Asia is behaving. Asia went real quick to 3,500 and then sold hard. So that tells me there's a liquidation area. And again, London opening, trading up and rebound and like showing rejection and dropping lower, that also tends to show me. And it's telling us there's lower lows. Okay, so how should we see New York open? We should start seeing New York depending on where London finishes in 2 hours, but I think it'll be around here. It won't be too far from where price is, hopefully, right? Because what New York has to do is grab liquidity, and it is going to do that above these highs and potentially above this one near the midnight open. And that is where you'd want to start seeing your A shape. Okay, so the A shape, just like the V shape, the V shape has lows. The market trades below the lows. Back above, there's a lower low, a higher high, and then this one. So this is the V shape respecting these lows. These lows, the market breaks below, comes back above and respects those. If you flip this, you'll see the A shape. And so these highs right here, this high has to get tested. Well, it doesn't have to, but it could. And this is the high that is going to probably use like this. Check this out. So this is sort of what you have to see in the A-shaped formation. I'm going to hide this one, and I'm going to make this more accurate to what the setup might look like. So let's say London closes somewhere around down here. Not closes, but gives the market, or hands over the market to New York, or rather New York opens down there, right? So I would like to see New York come up quickly and then create these little, like, these highs. And as it gets to this one, it'll come up and then trade back lower, sort of like this, and then come into this selling area. Potentially it could reach all the way up to the midnight. But regardless of where it goes, as you see the highs, but these little highs right here that the market is going to start creating, you want to see eventually the 1, 2, 3, 4, 5. So you want to see maybe a 1 like this, 2 below, a nice spike up, which would be 3, and then you want to see 4 come hard down below 1, below 2, I mean, and then 5, just a little retest, and then a big drop. So this right here would be sort of your 1, 2, 3, 4, 5. Check this out. So 1, 2, 3 up into that sell area, 4, 3, 4, and then 5, just a little pullback near 2, between 2 and 3, respecting, watch this, respecting this area right here. Okay, that is obviously if New York opens to the upside. If London for some reason just sells off real fast and it's already down here, then the A shape would be not so far up. It would probably just be a retest around this London's low. Okay, so around here, this would simply just sort of like shift a little bit lower. But the reason why I think it wants to reach this sell area is because there's the midnight open, and I'm measuring the drop that the market has had so far, and at least the 50% is going to want to retest it. Okay, so let's see how the market continues to develop. But as you see, it's clearly going to start liquidating part of the week. Okay, the target that I'm initially looking very tempting for price to reach is the previous all-time high, to get rebalanced there and shake hands, as I like to say. So this down push, this leg that goes down and up, this portion of the market that went down has not had some, like, a push to come and meet with, right? So these highs, they haven't met with anybody yet. Anybody, I mean the market, right? Coming down here. So this is initially the first target. Another very important thing I want to point out to is the seasonality tool. And the seasonality tool is telling us that starting today, the market of gold, historically, on average, 15, 10, and 5 years, starts a correction. It's April 21st, and the correction, there's a correction, a bearish direction all the way into 1st of May. So we could see these last few days of April to be a bigger correction, or longer. Maybe not lower, but it'll just probably trend a little bit more than most corrections. Most corrections are, they happen within a day or two, 1, 2, 3, 4, 5, or just a few pushes to the downside only. So this, and then the market sort of like consolidates and then it continues, right? This was a bigger, longer correction because this was the beginning of the month. So this was the 1st of April, and April wanted to get the low of the month, so it took a few days. Now we're not seeing necessarily the end of the month or the beginning of next month, but we are seeing a very accurate seasonality behavior. And if you see the blue line, which is 5 years on average, today starts a drop again until 1st of May. If that is the case, this could easily go target the previous high and maybe come even lower to this side right here. So as you see, this big empty area, which is an imbalance in higher time frames. And again, these highs they haven't shaken hands with anybody. And so this New York's low from Thursday, it sort of sets up this liquidity here. Every swing trader, every bigger hedge fund, capital, whatever you want to call it, as the market has been trending up, they're positioning their stop loss. They're trailing that position, those buys with stop loss orders. They're placing it around those lows. And we could see the beginning of a bigger, longer correction to take us at least to 3,250, 3,240, which is this area that hasn't shaken hands with the market yet. And I'm only thinking this could happen because the seasonality. I know the trend is your friend. On the long run, gold indeed will cross over 3,500, but I don't think that's going to happen until June. Maybe the end of May, potentially even July, because again, going back to this seasonality tool, I've traded this seasonality tool 2 years in a row and it's worked perfectly. Starting July 1st, gold goes up the rest of the year. January to today is a bullish market. Corrective and accumulative longer term accumulations take place during May and June. Now this has to do with gold production and how supply and demand works for gold, specifically, not because the situation of geopolitically speaking and economically is about to change. It's not that. It has to do with gold mines and productions and this could be just a bit off because of how unique and different circumstances are today. But it doesn't take off the fact that it's going to correct and the market is showing it, right? It clearly is showing it's going to want to correct a bit more. Different would be if gold is trending up and I'm like coming up here and telling you like, oh, we're going to see a correction and Asia just keeps buying and London is trending up like that. It wouldn't be making sense for me to say this right now, but based on market structure, things are lining up. And so we could see at least a correction, at least to 3,360. Okay, I'm going to call 3,360, 3,350. That is the range where I would say gold is going to get to today. And potentially lower. But let's see what happens. Let's see how New York handles it, right? Because New York might come down here and then price will be here maybe towards it's 1 p.m. or 12 or not even. I'm making things up already. I'm trying to sort of visualizing what it would look like, but I think it's going to be very similar to this session where, no wait, not this one. This one was trending up. Well, sort of, but London's got a lot of strength to the downside. So that's also something interesting and very, this is what it's starting to look like right now. London selling but they're not selling so hard yet. This could look two ways. You could have London liquidate hard and then New York open here, come down, buy at 10 to get to these high prices and during their PM session start selling again. And then that would trigger Sydney and Asia to continue that sell-off tomorrow. And then London also continue and then New York make a pullback and then continue selling. That would extend the correction, right? So remember, New York is last. Look at how New York comes and is the one that says we're bouncing. Over here too. New York comes here, bounce. New York comes here, bounce. I'm not making it up. New York comes here, bounce. New York here says we're bouncing. New York is the last one to make the lowest low before a rebound. So if New York is down here and bounces, maybe that's the rebound. But if New York is down here near this correction, comes up and starts selling again, that sort of leaves the door open for London to continue, and then New York say, okay, you want to continue? I told you I'm last. So it's sort of like they're challenging each other, and as the sessions play along, remember they have to tell the story and the narrative. So anyway, what else? Just to finish under 20 minutes, we're doing this. I extended myself a little bit, but I wanted to make sure I explained every detail of what I'm looking at and what I'm seeing. So I'm going to take off the sessions now so you could sort of visualize a bit better the setup and what I'd want to see. And I'm going to use another chart to show in lower time frame of the 5 minute what I'd like to see. So clearly we're already seeing lower lows and lower highs, right? We are seeing this is the midnight open, and we have technical levels. What are the technical levels? Wherever price was previous support and is now resistance. So that is like a pivot. So I'd want to see those prices get tested, and I want to see the A shape above those prices, above that area. Okay, so to be honest, this is the area I'm most interested in right here. And that is because it's near the all-time high. And if New York wants to sell, they're really going to make sure to get a premium price, so well above where it's at right now. Another way you could do this is you measure the drop that it's had so far, and above the 50% is where you want to see rejection. And so price might start coming back over here. Notice there's a bearish flag in the making. Also, if you want to point out to structure and market patterns and chart patterns, but essentially you want to see the market sort of peek its head above this red area and then come down and try to like consolidate here and then peak again and come down hard. And that's rejection. You want to see wicks in the 5 minute or 15 minute. It'll be amazing. It'll be awesome if you see a 1 hour candle with a long wick anywhere around here. Okay. So this is the flag I was mentioning, and it's about to break, and it could happen. But so what you do is you measure the drop that has that bearish flag, and you could measure it two ways: from the beginning of that drop and from where it breaks the structure. I like to use the breakout. So wherever it breaks, you point out, and if this area matches a key low, which it does right here, this is a key point, a low in which the market traded up. So there's liquidity down here. This low is a first initial target whenever that pattern breaks. Okay, there's a lot of liquidity down below that low because it's got all this area here. Okay, so this is where if New York is down here by 10 in the morning, they could buy. So that is, I'm extending myself because there's many scenarios. There's a few scenarios that can play out, and I want to make sure that you have most of the idea so that when you're looking at price and maybe you want to make a few trades of your own, sort of what the path could and should look like based on market structure. If this doesn't break yet and it flips back to the upside, that's good. That's what I personally would like to see. I want to see New York be the one selling up here. Okay, so this is what I'd like to see during New York open in a few hours. Maybe the market is going to consolidate here a little bit, and that is going to serve for New York to start peeking its head up here and then make a nice A shape like this and really start selling off quickly. Sorry. Yeah, something like this. So this is where I'd like to see the 1, 2, 3, 4, 5, right? And it might fail to retest the actual midnight price, which is 3487, but if it does, that's better because it's a bigger drop, longer drop, more profits, right? But this is essentially what I want to see. 1 2, I forgot 2, which is right down there a little bit. 1 2 3 4 5, and then price closing back below this red area. This is a nice pivot area. Okay, so this is where I would be looking for a sell. And I repeat, it is based on the seasonality only. And the fact that Asia is this niche, and you've seen this, we've talked about it, and Asia had a strong liquidation at 3,500, which is a very algorithmic price. Comes to show the amount of interest there is to sell there. So it's just taking chances, right? Okay, let's see what happens. It doesn't hurt to take a sell, right? It makes sense. You know, you simply put your stop loss just a little bit above that high, and you've got all this room for a correction. Okay, all the way down to these highs of 3,350 over here. So that is a nice risk to reward ratio, and it makes sense to give it a try. We've got a few, as you've seen already, a few elements and factors and variables that are aligning for a sell. So let's see how it plays out. Okay, guys, 21 minutes of this quick, sort of quick, but very complete outlook and analysis. And let's see what happens. Take care. Good luck.